Hi traders, welcome to this video. I'm doing this video a little bit ahead of time, talking about the potential that NFP can cause some further volatility within the markets. Now, let's face it, Trump yesterday announced a range of tariffs, some reciprocal, some sort of specified tariffs as well, including things like 34% tariffs on Chinese goods and things like that. And that caused uncertainty to drive even higher within the market. Some of these announcements weren't expected, and this is something that we spoke about over last week on the live stream, or even on Tuesday on the live stream, when we talked about Trump's tariff chaos and the idea that essentially that is this narrative finished yet? And I didn't think this narrative was over, and the market has continued to trade lower because of that. But is the non-farm payroll numbers going to compound this weakness? Now, we've just had unemployment claims drop about 2 or 3 minutes ago, came in at 219k. That's pretty good. That is pretty good. If we look at the grand scheme of things here and we open this up, it is one of the lower figures that we've had over the sort of past, few months and few weeks. So, that to me is a potentially a good sign, right? Maybe firms aren't panicking just yet. I will expect this to climb soon, and I will expect NFP numbers to come in a little bit lower. So the forecasts are we're going to get 137. I don't think we're going to see too many changes sort of in this number here. I will be shocked if this came in below 137. At the same time, if it did, you can kind of point to why that is happening, and it's largely due to the fact that firms are now worried about growth, right? And if firms start worrying about growth, like what we're seeing here, while we're seeing this huge downside in the market, what are they going to do? They're going to make layoffs. When layoffs go up, what happens? Non-farms will go down, and we'll see a decrease here. We will see the unemployment rate, which is just below, which is currently at 4.1%. We'll see this begin to climb as well. And if this starts again pressing towards that 4.3 and then gets beyond 4.3, that's going to spell big trouble for the markets. And it means that this move that we're having here on these stock markets at the moment, which, everyone seems to think we would rebound quite aggressively, market at the moment, if it takes these new lows out, then it could be a bit of a deeper correction. We could be seeing some further downside here. Now, data this week has not been too bad. If we look at sort of the overall data for the week, if we just take NFP out of this for a second, we had manufacturing PMI at 50.2, ISM manufacturing PMI came in a little bit lower at 49. JOLTS job openings came down, but that has been trending down for a while, so I don't think the market narrative is really shaped around that. Although if we look at how jobs have been falling since 2022, that's kind of in line with inflation as the market has been pushing lower. ADP non-farm came in at 115. Okay, that's a little bit better. Unemployment claims came in a little bit lower as well, which is better. So it'll be interesting to see how services PMI comes out this afternoon. I think if we see anything sort of below 53 heading towards the 50 again, I think we'll probably see a little bit more panic in the market. We'll see that compounding of the move to the downside. One thing I did want to touch upon is just the non-farm payroll seasonality report. We had a sharp decline coming into January. Expected. This has been going on for 20 years now, and look at 2024's performance, pretty much mirroring the overall average here, and 2025 doesn't look like it's slowing down yet. If this starts to divert though, and we do start to see big changes here, then we're going to be looking at something very, very sinister within the markets. If we see this trend continue and we get these kind of trending higher of jobs, then the market is going to feel that maybe there's a bit of a sort of soft landing to this whole situation in the market. But looking at the weekly, we're just breaking this 200 moving average again, or sorry, the 50 moving average. If this continues and to hold below this is certainly very bearish for the markets. If we look at the monthly, if you look at the monthly, you're probably arguing to yourself, well, there should be some kind of correction. If I take the swing low to the swing high, you got the 61.8 around the 38.8, you got the 50% down towards the 36s, and you got the 38.2 down towards the 35s. I mean, if we get anywhere near these kind of levels here, I think that's probably a very good point for the market to continue this overall upward trend that we seem to get from markets anyway. I mean, look in 2022 when inflation rocketed, we still had that decline in price there. So I think NFP could be an opportunity to compound the bearishness of stock markets. One thing that you need to keep a very close eye on, again, is that volatility index. I said anything above 20 is bad, anything below is pretty good. We got back above 20 again. Market is surging above this level. If this continues to kind of break highs, then I think the US stock markets are going to continue to slump lower. And one of those things that could impact that now is changes in employment. If we start to see the fact that growth projections now, because of these tariffs, start to come in a lot lower, which is what a lot of the market is kind of saying at the minute, they're worried about growth, all of a sudden it becomes, okay, well, is that kind of recessionary in nature? And are we going to see a potential US recession? So one thing that I do also want to just quickly touch upon as well, if we go on to the 10-year treasury minus the 2-year treasury, typically, right, when we see this inversion of the yield curve is what it's called, we do see a technical recession. If I go to the 10-year, if I just go max actually, these are the areas where we had recessions following an inversion of the yield curve, right? So there's the inversions here, and then following that sort of uninversion of the yield curve, we have these big recessions in the market. Are we going to experience another one of those going forward? So just something to think about. Just keep that in the back of your mind. Obviously, markets are at the moment just going through a little bit of turmoil. For me, one of the best places to be at the moment is probably the Japanese yen. We've talked about it all year being the strongest currency. We talked about the fact that this could be the best performing currency of 2025, and so far it's proven to be that way. So thanks for watching this video update. I hope you enjoyed it. Keep your eye on NFP tomorrow. If you start seeing unemployment figures rise, then that's going to be a bad sign for the US and its potential recovery. So thanks for watching. Speak to you soon.